Welcome back. You're listening to The Real Deal on Super Talk 99.7 WTN. I'm your host, Kim Hollingshead. We air every single Sunday from 5 to 6 p.m. Thank you so much for being with me today. Today, we're talking about boomers, and I think that they are just the coolest generation. And one of the things that's available to the baby boomers today that not many of them are taking advantage of is something called a reverse mortgage. Reverse mortgages, I think are one of the coolest things out there. So let's go ahead and walk through it. This is not a sales pitch. This is not like scare tactics or anything. This is just educational. So basically a reverse mortgage, it's an FHA home equity conversion mortgage. It's called an HECM mortgage, and it is a federally insured loan. It allows a homeowner who's 62 or older to borrow against the equity in their home without having to make a monthly mortgage payment. Basically, they borrow the money, whether that's a lump sum payout at the beginning, at the closing, or it's kind of like monthly payouts. They can also use it almost like a home equity line of credit, where they can just kind of keep that line of credit there and then just borrow on it. It's really great because basically what they're going to do is they're going to borrow this money and then the money is paid back. It's not due. There's no monthly payments for as long as they live in the home. But once they pay it off at the end because typically it's going to be after the person passes away. I think this is really undervalued as a mortgage product because I see boomers using home equity lines of credit, which is great, but home equity lines of credit have a fluctuating interest rate. And then they also have to pay that down. They're not expected to have that line of credit, with a balance on it for forever. They're expected to pay it down, and they actually have to make monthly payments on a home equity line of credit. Whereas with the reverse mortgage, whether they do a lump sum payout or they kind of use it like a line of credit, it's actually just there. It's there somebody who passes away, they can either pay off the house at that time or they sell the home and then they use the money from the sale of the home in order to pay it off. What I think is something that most people don't understand is that the balance of a reverse mortgage, it is going to grow over time. It's not going to shrink, right? Because a regular mortgage shrinks, so the balance shrinks over time. So, that's really where I would say most people get themselves into trouble because they kind of grow this balance and then they never have an opportunity to pay it off. But, they still have to also pay property taxes, keep the homeowner's insurance current. They have to, make appropriate repairs and things like that. But basically, as long as you live in the home as your primary residence, then, you're allowed to spend some time away from the home, in case, there's a medical reason. But for the most part, you actually have to be living in the home the entire time. So, I would say falling behind on taxes and not paying the homeowner's insurance are probably the leading causes for that default. But, that's the thing that most people worry about because they want to have this home available so that they can pass it on to their heirs whenever they pass away. So this is a part that is the most misunderstood part of it. A reverse mortgage is a non-recourse loan. So that means that neither you nor the estate can ever owe more than either the loan balance or the home's value, whichever is less. The federal mortgage insurance that's paid on it is going to cover any kind of a gap. So basically that means that your heirs can either repay the loan, from proceeds from the estate if they want to keep the home, or they can pay up to 95% of the appraised value. And then they are not going to do that, then they can just sell the home and pay off the loan. And then they keep whatever is left over, or third option, they can just hand the keys back to a lender and then they're not going to owe anything. It's not like your heirs or personal assets or assets of the estate are going to be deducted for any kind of a balance on that loan that's left over after the person dies. So on costs, you're going to expect to pay some certain amounts of upfront costs whenever you're taking out a reverse mortgage. But the thing is that it's actually, I think, a really great product to have, much better than a home equity line of credit, because like I said, individuals are on a fixed income. I think it's brilliant. Most people, when they hit, this retirement age, they don't have a huge balance on their house, but they don't have the income coming in to qualify for a 30-year fixed rate or, any kind of a refinance to tap into the equity of that home. unlike a traditional mortgage, because you do have to have a good credit score and you have to have income to qualify. But in the case of a reverse mortgage, they don't have to have that income. It's just based on the equity in the house. So, and the lender's definitely going to hold a lien on the house, but they're not actually going to be the quote owner of the home. And that's the other misconception, is that I hear some people say, well, I don't want to do a reverse mortgage because I'm going to have to give the bank my house. That's not the case. The bank just has a lien on it. So it's a real financial tool. It's for those who have a lot of equity locked up in their house and they need money to live on. I think it's a brilliant way for Tennesseans, especially, to be able to do that, because we've seen property values here kind of skyrocket, and we love that. So if you are interested in obtaining a reverse mortgage, just give us a call. I'm not a loan officer. I work with amazing loan officers who can help you with this. I think it's a great tool if you have aging parents, retiring parents, that they can tap into some cash, and we can just have that peace of mind that that loan is there waiting in case they need to tap into that money, because inflation is really real. Things are costing a lot more money these days, and they worked really hard to pay off the loan and to build equity in their house. Anytime my parents say something about they want to leave something to me and my little brothers or my sisters, I always kind of joke with them and I say, hey, you ain't dead yet. We're fine. Take care of yourself. You worked hard your entire life. That money is yours. Like, don't worry about us. We're good. And I really hope that, I know that parents tend to want to have those assets to pass on to their kids, but they got to take care of themselves first. So I would encourage anybody who's willing to guide their parents to do that, or they want more information, to just give us a call. We'll help you through the trusted network and connect you with a qualified loan officer who can help you with a reverse mortgage. Now, switching gears, let's talk about property taxes, because Tennessee has a relief for property taxes available. It's actually through the Tennessee Property Tax Relief Program. It's available to homeowners who are 65 and older, homeowners with a qualifying disability, and disabled veterans and their surviving spouses. So that's my dad. He's on 100% disability with the VA, so they don't have to pay they get property tax relief through Alabama. The program is actually run by the state, so your county has to participate in it. So if your county doesn't participate in it, I believe you can still qualify through the state or apply through the state. So basically, through elderly and disabled categories, the current combined income limit, it's around $38,400 roughly. And the relief is basically going to be calculated on roughly $33,600. Okay. So that's going to be like the market value of roughly up to $33,600 for the home. Disabled veterans and their surviving spouses, though, they have no income limit at all. And their market value cap is much higher. It's actually around $175,000 higher. So this is a reimbursement program that the state pays part of your tax bill, and you have to apply to it through your county trustee. Now, that's the state program. There's also a totally separate tax freeze program, and this one is definitely worth understanding as well. What it does is it locks your tax bill in at the dollar amount that you owed the year that you first qualified, so it doesn't climb. Freezes the tax bill, right? The tax freeze. So even when county rates go up, or even when the county is reappraising your taxes, the counties, if they opt in to participate in this, have this tax freeze program. So good news, Davidson, Williamson, Rutherford, Sumner, Wilson counties, they've all adopted the tax freeze. Murray County has not, but the city of Spring Hill has, okay? That's for their own municipal city taxes, not the county taxes. So what you want to do is you basically want to contact the county, contact the Metro trustee, 615-862-6330, or you can call, whatever county that you're in, give them a call, let them know that you want to opt into this program, because there are some things that you have to do to qualify for it, okay? Now, here's a practical part. I want you to actually listen to me on this, please. Don't just assume that the county is going to come and find you. They're not going to. You have to opt into these programs. You have to file usually every year for a tax freeze, and you definitely want to provide your prior year's tax return. You have to have proof of age or disability, VA disability when you call them. There's like an in-person process usually as well. So, if you're eligible last year, but you didn't reapply, then the relief may not apply this year, and once the years go by, there's no like going back and catching up. So you really want to make sure that you make that time every year because it can make a huge difference, especially when you're on a fixed income. Okay. So guys, when we come back from the break, I want to pick this back up. Let's bring it back to Iran and let's talk about what's happening in the world. You're listening to Super Talk 99.7 WTN.